Happy Monday, everybody. I hope you had a great weekend. Only a 2-day weekend this time, no long weekend. We actually have to come to work today on Monday. So today is July 11th, 2022, and this is your Monday market update. Let's jump right in last week's market action and preview this week as well. Markets were closed on Monday. Last week, of course, for the Independence Day holiday, and the holiday shortened week started heavily in the red on Tuesday morning. Sharp declines at the open, about 2% across the board. Maybe all that month-end and quarter-end work from last week was being unwound. Regardless, recession worries continued. Oil prices had a steep drop to levels we've not seen in a while, back below the $100 a barrel level. Let's see that at the pump, please. As of Monday, 21 straight days of U.S. gas prices have actually fallen. Have you noticed that? The 10-year yield fell 10 basis points. Remember, safety money flocks to that. That led to another 10-year and 2-year bond yield inversion. Remember that when we talk about the recession. Late morning, we saw the markets catch a bottom right around last week's low, and we saw a pretty significant reversal. By the end of the day, the Dow was still down, but only down by about 0.5%. S&P was up slightly. NASDAQ outperformed, up 1.75% for the day. The beaten up stocks are back on the move, this time up. Growth significantly outperformed value on the day, just another day. We'll see what happens. Stocks jumped between gains and losses on Wednesday as the yield curve was inverted again. The market digested eco data that was not as bad as feared. You know how I feel about that. And we even dealt with the FOMC minutes later in the day. Those minutes came out and told us very little new information. All the major indices finished up slightly, less than 0.5% on the day. We did have copper drop again, and we've spoken about the global growth outlook implications of our Dr. Copper hitting new lows. It's one that we'll keep watching, but is not singing a happy tune. Gold was down a bit, and oil fell again. Did hit near $95 a barrel at one point, but ended down about 1% at 98. Demand worries are all of a sudden back in focus. Did we forget that supply is going nowhere? Nothing new from the U.S. Regulations are keeping that move slow. Nothing new from OPEC as they can't keep up with the supply need. Nothing new from Russia either. Will any of that change soon? Not likely. So I don't see that staying in place. And by the way, pre-pandemic, my thesis was that we'd see demand come down due to electric cars and better gas mileage overall. Well, EV production is stalled since we cannot get the raw materials. Let's see how that affects demands. We also saw another crypto broker file for bankruptcy. This is an eye-opener. Quick recap. When Lehman Brothers went bankrupt in the financial crisis, if you had an account with Lehman and you had Coca-Cola stock in it, for example, you did not lose that stock. These crypto bankruptcies, it's not clear yet, but it doesn't look like you'll get your crypto back like you had it. Very, very worrisome. Stocks extended their relief rally on Thursday as hopes for peak hawkishness, and the market started to focus towards the jobs report on Friday. Stocks gapped higher at the open as jobless claims were digested. The news from China about a new $220 billion stimulus was talked about. The jobs information looked to tell us that the jobs market may be softening, and then the EIA report on the energy space sent oil back up another 5%. Fed heads Waller and Bullard are sticking by their story about getting inflation under control. Stocks hit session highs as the final hour came along, pulled back a bit into the close to close just off the highs for the day. Dow up 1.12%, S&P up 1.5%, and the NASDAQ up almost 2.5%. Every sector of the market except for utilities were up on the day. The reason for the moves? It wasn't much. Samsung did come out with good numbers. That was a change for chip companies, and you did see Boris Johnson resign in the UK. That takes some of that risk off the table, but not so much market moving. Overall, there's still hope that we'll get more concrete information about peak inflation and peak hawkishness, just not much yet. We did see a pop in copper, up over 4% for the day, and as I keep mentioning, as a proxy for global growth, this is a good sign. Oil popped too on the EIA report on demand coming back, ignoring the obvious market mover supply, as we've talked about. I did see in my research reading that in addition to another 10 to 12 target prices being lowered, there were actually a few upgrades, so watch out. Friday got off to a start with the overnight assassination of former Prime Minister of Japan, Abe. It had much less effect on the markets than I thought it would. Maybe that's just an indication of how crazy this world actually is. Then I recalled that this is not the only one recently. Actually, I had to look it up and confirm it, but the president of Haiti was actually assassinated in his home in July of last year. Odd that I seem to recall more press on that one than this one. Of course, Abe was out of office anyway. Regardless of the more senseless loss of life, the market was not reacting to that. The jobs numbers came in, and it was a bit hotter than expected. Bigger number was the average hourly earnings growth, up 5.1% from a year ago, a bit faster than estimated. As I mentioned last week, although there was a lot of talk about this number, it was not the market mover that it has been in the past. We'll be holding out for this coming week's CPI and PPI numbers, along with the start of earnings season. NASDAQ closed up for the day, less than 0.25%. Dow and S&P down slightly for the day. All three major averages closed up for the week. NASDAQ up almost 4.5%, S&P up 1.9%, and the Dow lagged, but still up just under 1%. As we move into the coming week, as I said, CPI and PPI are coming, and they will be the market movers, one way or another, and possibly both if things hold the way they have been. CPI is due out on Wednesday and is expected to come in with a print of about 8.8% year over year. Recall that I just told you that wage growth was 5.1%, not keeping up with the expenses, the growth of the expenses. PPI is set to print over 10.4% year over year. If these numbers moderate, this can start to indicate peak inflation. We're not showing this yet, but this is where it'll start. Two main themes to watch this week are inflation measures, both consumer and producers, as we've been saying, and earnings. As I've been reporting to you, the target price reductions are 10 to 1 or more in my daily research reading. But note that has not come with a material change in earnings estimates. That may be a problem. We've seen revenue come down. Recall I've been telling you about demand destruction. Well, if there's less demand, there's less purchasing by the consumer, less revenue. It seems like a logical cycle, no? So we've seen the margins squeezed also in many businesses. Those have not been able to stick it to us with higher prices from everything from milk and cheese to gas and airline tickets. So as all this has happened, we've lowered our target prices, but not as much the earnings estimates. It's like sort of like changing the finish line of the race, but not changing the rules. So do valuations accurately reflect this? This is what we'll start to see more of soon. Estimates are starting. We'll start to see it soon. Estimates are still showing 5.7% earnings growth for the S&P for quarter 2, quarter 3, and quarter 4 are 10.9 and 10.5 respectively. We'll kick it off with Pepsi and Delta on Tuesday and Wednesday. Then the banks line up: J.P. Morgan, Morgan Stanley on Thursday, Wells, Citi, and PNC on Friday. It is notable that, right or wrong, the banks are seen as a good tell on what the consumer's doing. After all, they do hold the money. Back to inflation for a moment. We'll not only see what the numbers are, a good chance that they are high, maybe even that they are higher than expected, but so much of this is already known. We know that oil was at 122 a barrel last month. Now it's back to near 105, as I said, is even below 100 this past week. And we're not sure where that the number is really tracking rent moves either. So we'll see what is a 10 handle on PPI and maybe a high 8 or even 9 handle on CPI due to this market. How much do we really already know and price in? Wednesday and Thursday, those are the best chances for firework from that data. June retail sales due out on Friday, but it's a very important number, but be prepared for it to get lost in all the other news. Fed heads will also be busy. Williams today, Barkin Tuesday, Waller Friday, Bostic to round out the week on Friday. As always, please stay in touch. We continue to be constructive on this market and certainly parts of it, and careful to invest with your goals and timeframes in mind. Check out the Friday planning videos, and please share this with others if you want, if you think they'll enjoy it. Have a great week.